Okay, so I want to know if you can hear me. Okay, so if you can hear me, just indicate in the chat box. Let me know that I'm communicating. I want to get your feedback. I want to get your feedback. I want to get your feedback. Okay, so you are welcome this evening to our training. So today is day two of our training, and we will be having another time of learning, another time of um, adding to our knowledge. I'm still Sarah Bamba. So yesterday we started with the basics of forex trading. We explained what forex trading is, when the market opens and closes, unlike crypto that the market is 24/7. We explained the terminologies, the lot size, the pips, the spreads. We explained the every other thing that you need to know about the forestry, about the forest market. So as regards basics. And we saw how to use our trading app like the trading view, and that's also because I was indicating that if you are using your PC for your MetaTrader apps, the interface is entirely different from that of a phone. So I didn't just use the PC to explain because you still get confused when you go to your phone. All right. So today we'll be taking it further. We will be learning about analysis. That is what we want to do. So let me share my screen now. Let me share my screen now. Okay, so this is uh, trading view. I taught us how to use it yesterday, so I believe a lot of us always use this platform. If you don't know or you are lost, you can go back to the replay. It's still on air on YouTube to watch it. Okay, so this is the trading view platform. Now, what we're talking about analysis. That's what yeah, our focus is for today, analysis. So, what is analysis? What is analysis? That is what will be on. So, analysis is the prediction of market movements. So, this is the definition of analysis, the prediction of market movement. Like I said before, when we were on our class yesterday, I said that um, we predict in forex trading. What we do is that we predict the movement of um, currency pairs. We predict the movement of currency pairs. So it's from this prediction whether place a buy order or a sell order. So that's what analysis is. The prediction of the market movement that makes you decide to either place a buy order in the market or a sell order. That is what it basically is. So there are, although experts say that there are three types of analysis, me I go with two because I've not really seen reason or I've not really come to terms with the third one. So I'm going to be teaching just two types of analysis, but I will explain. I will there is fundamental analysis. There is fundamental analysis. There is technical analysis, and according to some school of thought, there is sentimental analysis. But I'm not going to. dwell on sentimental analysis because I've not come to terms with it. So we're going to just stick with the first two, which is fundamental analysis and technical analysis. Now, fundamental analysis is the use of fundamental analysis is the prediction of the movement of the market using events, news, economic data, news, life events, and a lot of other stuff not the chart. That is not the chart. So that is what um, fundamental analysis is. Anything that you use to analyze the market that is void of the chart is fundamental analysis. Okay. So let's say for I think this works well with cryptocurrency trading when you get an information concerning a particular coin, you didn't look at the chart to place to buy the coin. You just got the information and you go ahead to buy that coin. So that is fundamental analysis. Another example of fundamental analysis is using news events to predict the movement of the market. So, for instance, there is a news that I'm trying to use it. The most recent one, okay, it was when Bitcoin came crash from over $70,000 to 20, I think 29,000 dollars. What happened then? It was a live event when Putin bombed Ukraine, when the Russia and Ukraine war happened. So that was when Bitcoin fell. So that is a fundamental analysis, life events that affect the movements of pairs. Okay, another example is when Donald Trump won the election. When Donald Trump won the election, US dollar was just increasing in price, just like that. And traders will just mostly go and place a buy order on US dollar related pairs like USD CAD, USD JPY, USD CHF, you understand? So that is fundamental analysis. Another example of fundamental analysis is when the Queen of England died. So that is a life event and a negative life event. It's currency. So when the Queen of England died, Great Britain pounds were just losing in value. It was just losing in value, it was reducing in value, and all Great Britain related pairs like GBP, JPY, GBP card, GBP AUD, GBP CHF, and everything that has GBP in them, like from the beginning, they were just losing value. Why? Because of a negative event that happened towards their monarch. So another example of fundamental analysis that really affected the market was when Donald Trump was just imposing tariff on China. You know that tariff war between China and USA. During that period, dollar was just dropping. So that's analysis. Immediately Donald Trump made the news, US dollar was dropping, and pairs like Euro USD, GBP USD, AD USD, SAD USD, they were just increasing in value. So that is basic fundamental analysis. You just get the news event of what is happening in a particular currency. Mind you, not Nigerian naira. It doesn't affect naira. Okay, so Nigerian naira doesn't have that much weight to crude the forex market. Okay, so let's say for a pair like euro, if something of if something happens in the European in Europe, it will affect the European euro. You understand? If maybe anything of value, there's a natural disaster. There is I don't know. Okay, a recent fundamental just came to mind. Like there was a time gold was just increasing in value. I think gold went from around 2,000 to $3,000 per bar. And we didn't really know, okay, not we, I for one, me, I didn't know what was happening. I was like, why is gold increasing in value like this? It was later, I think, some months back that Some months later, I heard that gold was discovered in one country. So that's why the price of gold was just going up. So that is fundamental analysis. Using news events, using news events to predict the movement of the market. So that is fundamental analysis. That is what it is. Now, fundamental analysis is just this, but the truth is that 90% of the time, fundamental analysis do not really move the forex market. It does that with crypto, okay? But forex, what really moves the forex market is technical analysis. Technical analysis is what really moves the market. It's what really moves the market. So I'm going to be dealing more with technical analysis. That's what I'll be doing more, technical, not fundamental. So I'll begin with the the basics of technical analysis. First of all, this screen, this display you are seeing here. Let me start here. Let me start from this display you are seeing here is called the chart. These are charts. Let me just reduce it to cover a lot of. So these are charts. This is what we use for technical analysis. This chart that you are seeing here. I want to delete some stuff so that we don't get confused. Okay. Yesterday I taught to use trading view. So I believe we all know that by now. So this is the chart that we use for technical analysis, basically. Then although I want to although a lot of persons here should know this, but I'll still explain it. These things, this red and green stuff you are seeing here, they are called candlesticks. They are called candlesticks. So this is our candlesticks. There are different sizes, different types, and they give you information about different things entirely. Okay, so one candlestick will give you an information about something, another candlestick gives you an information about something else. They don't give you the same information. It is when you see them and interpret them correctly, that's when you know what they are doing there. So this, let me use just one, let me put one at this center. Okay, so I also use this one, this big red colored candle. So this is the candlestick. This feed part is called the body of the candle, and this the line you are seeing on top and under. The line that you are seeing on top, like under the body and on top, they are called the wick or the shadow. They are called the wicks, or you can call them the shadow. So this is the candlestick. Now, it is, you can see that some are red in color while some are green in color. The ones that are red in color, they are the bearish candlestick. You know, I explained what is bearish yesterday. If you have not watched the video for yesterday, you can go back. Then the ones that are green in color, they are called the bullish candlesticks. Okay, so let me set my chart like this. Some person charts, their candlesticks is white and black. Mine is green and red. These are I do mine. So these are the candlesticks. So I believe we now get that. And like I was saying before, this is on 1 hour time frame. If I go to, let's say, 2 hours time frame, one candlestick here represents 2 hours. If I go to 3 hours candlestick, 3 hours time frame, one candlestick here represents 3 hours. So that is just how the chart is and the candlestick. So the first thing I want to talk about in technical analysis, like this is the basics of technical analysis. I want to talk about the support and the resistance. I want to talk about the support resistance. So 50% of technical analysis rests on support and resistance. They flow with support and resistance. So what is the support? Let me bring up my test. What is the support? The support is the lowest place of the chart from which market reverses from. I believe I'm spelling the thing correctly. I don't. Let me take it inside. For which market reverses from so to an uptrend. I will explain what an up. So the support is the lowest place of the chart. Okay, lowest place of the chart from which market reverses to an uptrend. So this is the support. So let's say the market was like this. Um, the market was just doing this and this, doing this, and comes it goes up this way, then it comes down. Let me use something another tool. Let's say let me use a brush instead. So let's say the market was this way, goes up and comes down, goes up again and comes down. Man is bent, I know. Goes up again and comes down. So and all of a sudden it just starts going and up and up and up. So now this place that the market starts going up from, this place is called a support. That place that the market just suddenly goes up from is called a support. So that is where what a support means. So let me go to my chart and show us examples of support. I have to zoom in my chart right now so that we see areas of support on the chart. Okay, let me delete this. I want us to have a plain chart. Okay, I've seen one that is good enough for us to use as an example. Um, Now look at the market was coming down initially. Market was coming down, and when it went up, it came down again and it reversed again from that point. Now this point where the market reversed from to be an uptrend is called a support. This point is called a support. Let me look for another example. Let me look for another example. Okay, I think I've seen one. So the market was actually coming down. Let me go to a higher time frame. Okay, let me use this. So the market was actually coming down and down. It got to this point and it reversed up. So this point that it got to and reversed from is called a support. I hope we are getting this part. It's called a support. So any if the market is on a downtrend and it suddenly starts going up, that place that it goes up from is called a support. Now, what does it tell me? It's telling me that that zone is a major zone, and anytime market comes to that zone, it's going to go up. So I'm going to look at chart from like months back. Let's look at sometimes a support of years back can be respected. Um, okay, let's see this one. Now this was market was actually coming down. This is a monthly time frame, so this is not like a candle here represents 1 month. So market was coming down when it got to this place. This was in 2005. Yeah, when it got to this place, it went up and it went up, came down, danced around. When it got to that same place that it went up from in 2005, this was 5 years later, 2020, that's 2010, it still respected that support and went up. So, hope you are getting the gist about support. It was when wherever the market reverses from, maybe the market was in a downtrend and suddenly starts, it reverses up. That is a support. That is a support. Okay, so let me see. I want to look for other examples of support so that we have a better understanding. We have a better understanding. Um, okay. I love it when I've seen one, two, three. Okay. Now, one thing you should know, support are in zones. It's not just one place. So it's a zone. Let me explain this one first, then I'll mark out this one. So the market was down. When it came here, it went up. This was in 1993. Okay. So the market went up, and in this was now 2001. It came to that same area, as you can see, and it went up again. Now it came again in 2009, the same area, and the market went up again. So this is a confirmed support area. So I said earlier that the market is in the support area is in zone. It's not just one point. So I'm going to mark it using my rectangle bar. This is what I so this is a support zone. You get. So there is every tendency, although it has been broken through, but had it been this support was still intact, I'll just do was is to wait for the market to get here. And when it gets here, I'll place a buy order. When the market is at a support, what you do is to place a buy order. Hope we are taking note of this thing. When the market is at a support, what you do is to place a buy order. This is analysis. This is how to predict if you are going to place a buy order or a sell order. So this is just it. When the market is at a support, place a buy order. So the next thing that we'll be looking at is the opposite of support, which is the resistance. This is the resistance. So the resistance is where the market also reverses from, but in the opposite direction. So let's say the market was going up, going up, going up. And all of a sudden, it starts coming down. It just starts coming down and down. So this place it starts coming down from is called a resistance. This place that the market starts coming down from is called a resistance. You get that's just what it is. It is a resistance. So when the market is at a resistance, what you do is to place a sell order. For a support, you place a buy order. For a resistance, you place a sell order. So let me just put it down. For a resistance, you place resistance is equals to sell. You place a sell order. I made it clear yesterday that in what we do in forex trading is to buy is the buying and selling of currency pairs. Finish. And selling of forex pairs. That is what we do in forex trading. So you're either placing a buy order or you're placing a sell order. So I've actually marked a lot of songs here. I think I have to take them off so that I can, for the purpose of this class, let me delete them off. Okay, so let's look for resistance areas. Let's look for resistance areas. Okay, I can see some here. Okay, so the market was different. Okay, let's see this zone now. You see, market came here, went down. This was in the 90s, that is 1990. In 6 years later, 1996, market came to that place and still went down. This is a resistance. The same zone in 2003, the market still got there and dropped. So this is a resistance zone. I've said it earlier that it's not just it is a zone. So I'll highlight the zone. Okay. Please, if you have any question, you can be dropping them in the comments. I'll pick them up. I will I'll pick them up. So this is resistance. Now I want to look for earlier ones because these are years back. So if I want to look for the ones that are most recent, I'll go to a weekly time frame or a daily time frame because these ones are showing more recent accounts, not those ones of years back. Okay. Now there's what is called diagonal support, what I call, not what is called, because I'm the one that actually named it. It didn't have a name, but I just noticed it and called it a name. I call it diagonal support and resistance. So diagonal support and resistance, they are the support and resistance that are not straight. They are not horizontal. Like the ones we saw just now, they are like this, just straight. So however, the ones I call diagonal resistance or support, they are not straight, they are slant. Like, let me use, they are slant like this. You get. So this is what I call diagonal support or resistance. So it is when the market does something like this. Let me show you, give you an example. Mm, Let me use my brush. So it's when market does something like this, goes up, comes down, goes up, comes down. So you see that it is respecting a resistance. Hope is clear. It's respecting a resistance. Now, this type of resistance is not flat like this. It's not flat like this. Like it's not straight. It's bent. So this one is called the horizontal support and resistance. This one is diagonal support and hope this one is clear. It's clear enough, right? Okay, so let me continue. Let me explain what it is. Let me explain what it is so that we can follow. Now, let's read this. Okay. All right. So now for this kind of support or resistance, what you do is to use this tool, our trend line tool that we saw yesterday. This is a trend line tool. I will just to connect highs and low. So this is a high. This is another eye. This is another eye. I don't want to count this because this is somewhat low. But I'll place it at this eye and connect it out like this. You get. So this a diagonal support. Sorry, a diagonal resistance because it's slant. So I will leave it like this because it is expected that if you can see my chart clearly, the market is currently at this point. Let me expand it so that we see. My screen is not moving well. It's moving on. Oh, please, can you see my screen? Wow. So, if you know my screen is not moving on your end, let me see. Let me stop sharing, but not moving. Okay, let me go back and share. Let me share my screen again. Let me share my screen again. Okay. So if you can see my screen now, let me know. I stopped sharing and started sharing again so that um let me know if you can see my screen now. If it is now moving, I just got a feedback that my screen wasn't moving. I didn't know. Thank you for the feedback. Wow. Okay, Let me do it again. I don't know if it's just okay. Are we not seeing my screen? Oh, whoa. Okay. So can you not see it? Let me know. Let me know. Let me know. No. Okay. Um, is it moving now? Because that was the issue. Okay. So I believe we can continue. Hope you didn't miss my what I was uh, support and resistance because we are still on support and resistance. I've gone far. Okay, so I was explaining the diagonal support and resistance, and I said that you do this when the support and resistance are not equal, like they are not on a plane or on an equal level. That is when you use diagonal support or resistance. Okay, so I was saying that we have already marked this out. Let me Okay, so we have already marked this resistance out. You see that anytime the market gets to this zone, it comes down. Anytime it gets to this zone, it comes down. Anytime it gets to this zone, it comes down. So this is a resistance zone. So I said that since we have marked this out, we expect that when the market gets to this point again, it's going to drop down. When the market is going to drop down. So what are you going to do? You wait for the market to get here. When it gets here, it gives a confirmation and you place a sell order. You wait for the market to get here. When it gets here, it gives a confirmation and you place a sell order. Like I said before, for a resistance, you place sell orders, and for a support, you place buy order. For a resistance, you place sell order. For a support, you place buy order. Hope we get the concept of support and resistance. Please, if you do not, kindly indicate in the chat box because I want to move to the next thing. If you do not understand the concept of support and resistance, say it in the chat box so I will just go over it again before I move to the next thing that I want to talk about. We're in technical analysis. Okay, it's clear. Please, got it. Okay. Okay, let me get one more response before I proceed. At least, if you get it clear, let me know. If you do not, please, we are here to learn. I'm here to teach. I should come again with support. Okay, like I said support is the place in the chart from which the market goes up from. So I said that if the market was coming down, I'll just quickly go through it. If um if the market was coming down before, like the market was coming down and all of a sudden it started going up, like going up. So that place that the market went up from, like this place that the market went up from is called a support. The place that the market went up from is called a support. So that is what a support is, where the market starts going up. And when the market is at a support, what you do is to place a buy order. When the market is at a support, what you do is to place a buy order. That is just what you do. Now, for the diagonal support and resistance, I said that There are support and resistance zones that are not straight, like they are not horizontal, they are not flat, but they are slant or bent. So this is it. Let me look for another example so that I will use it to explain it. Hmm, let me go to a lower time frame. I want to get a very vivid. Okay, I want to get a very perfect. Okay, let me go to another time frame and see if I can bring this one out. I'm trying to look for a good example. Okay, I've seen one I can manage. So we have this one like this. You see, this is a resistance that is not slant because anytime the market gets a comes down, okay, anytime the market gets a comes down, so this resistance is slant, it's not flat. So this is a diagonal resistance or diagonal support. I believe that's that. So the next thing we'll be looking at is the next thing we are going to look at is called the trend of the market. I think this one is popular. I believe we should get these things faster because we are coming from a crypto background. Okay, um, everyone here is from the Alpha. So we are coming from a crypto background. So these things are known. Should be sorry. These things we should be familiar with a lot of this stuff. Okay, so we are going to be looking at the market trends. So we have four. Okay, some experts will say that you have three trends of the market. To me, there are four, not three. But I will explain. I'll explain myself. Don't worry. So we have the uptrend, we have the downtrend, we have the ranging market, we have the ranging market, and we have the Shopee. Sorry, Shopee. Okay, so that's the types of markets we have. Four types of markets. Market trend. We have uptrend, downtrend, ranging, Shopee. So what is an uptrend? An uptrend is a market whereby prices make a series of higher highs and higher lows. I'll take that again. The uptrend is is a market, or I just like using simple words so that everybody can understand. I don't like speaking grammar. It's a market whereby prices makes a series of higher highs and higher lows. This is so I'm going to draw that for us. Okay, so don't worry. Let me use my brush. So whereby the market is here and it comes up, comes down, goes up again, comes down again, goes up. You can see that the market is, even though it's coming down, but in the recent, it's actually going up. So this is an uptrend. This is an uptrend. The market is going up. The market is going up. This is an uptrend. So when the market is on an uptrend, what you do is to buy, place a buy order when the market is on an uptrend. So okay, this is a very perfect example. We see that, um, let me remove this from my screen. Okay, so we see that the market was actually in a little downtrend, like the market was coming down, and all of a sudden, Let me know if you can hear me so that I won't be talking to myself. Let me know if you can hear me so that I won't be talking to myself. I'm not getting our feedback. Can you hear me? Okay, okay, okay. So let's continue. I think I had audio issue just now, so we can now proceed. Okay, it's okay. Okay, okay. You can hear me. That's good. And I believe you can see my screen. So I believe you can see my screen. So let's continue. I was talking about the uptrend. I said that an uptrend is a market whereby prices makes a series of higher highs and higher lows. Prices makes a series of higher highs and higher lows. So we say that the market was actually coming down, and when it got there, it started going up. It just turned to become an uptrend. It turned to become an uptrend. So this is where our diagonal support or resistance come in. I'll use my trend line to mark this place like this. Can see how it goes. So this will just give me an inkling of when to enter next. That's just what it is. So when the market is in an uptrend, what you do is to place buy orders. When the market is in an uptrend or on an uptrend, what you do is to place buy orders. That's just what you do. You place buy order. Don't place a sell when the market is going up in an uptrend. Place a buy order when the market is in an uptrend. That's just what it is for an uptrend. So for instance, you get here, like this is a high, the market, let me use my brush to indicate it clearly. Market comes up, then it comes down again, it goes up, it comes down, goes up, comes down, goes up, comes down, and so this is what an uptrend looks like, where the market makes a series of higher highs and higher lows. Market makes a series of higher highs and higher lows. Okay, so that is an uptrend. Like I said before, in an uptrend, you buy, don't sell, place buy. So even though I don't buy here, place my buy order here, I can actually place my buy order here. I can still place my buy order here. So that is what an uptrend is. Now let's look at, oh, sorry. Let's look at the downtrend. The downtrend is, let me write it out so that we go with the flow. The downtrend is a market whereby prices makes a series of lower. Now this one is lower, not higher. Lower highs and lower lows. This is what a downtrend is. The market makes a series of lower highs and lower lows. Okay. So in a downtrend, you have something like this: down, 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 and down. So this is what a downtrend is. The market just keeps coming down and down and down and down. So in a downtrend, what you do is to place a sell. In a downtrend, what you do is to place a sell. You don't place a buy order in a downtrend. You place a sell order in a downtrend. So let's look for examples. Let's look for examples. Examples of downtrend. Examples of downtrend, examples of downtrend, maybe. Hmm. Okay, look at one here. This is a downtrend. Market just keeps coming down, down. Let me use the brush to highlight this place now. So the market keeps coming down, 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 down before it started going up, because I bet you this is a support. So the market hit a support and it went up. So in a downtrend, like I said before, you place a sell order, place a sell, don't place a buy, place sell orders in a downtrend. And since I was giving this example of diagonal resistance before, so the diagonal resistance is here already. So if you have any confusion about the uptrend and downtrend, please indicate in the chat box. Just let me know. If you have any confusion, let me look for another example of the uptrend and the downtrend. I believe this one is an uptrend. Yeah. Let me go to a higher time frame to see it clearly from a clearer view. This is a downtrend here. From this point, here, market came down all the way to this point. So this is a downtrend. In a downtrend, you place a sell order. Let me look for an uptrend, another uptrend example. Okay, it's not there. I'm still saying downtrend. Let me go to another downtrend still. I'll get an uptrend soon. Okay, I've seen an uptrend, so let me bring it out for us. So here we are. Wow. This uptrend is kind of wide, like the distance between it is so wide, but I believe it's clear enough for us to see. It's at least in the middle. Okay, so this is an uptrend where the market goes up, comes down, goes up, comes down, goes up, and before it breaks. Now, one thing you should know is that there is no permanent trend. Like the market will not be an uptrend forever, and the market will not be a downtrend forever. That is where support and resistance come in. So, if the market is on an uptrend when it gets to the resistance, it reverses and becomes a downtrend. So these are the factors. This question just came in as I was just talking. So the factors that influence down or downtrend and uptrend is the support and resistance. Now, if you can see my chart clearly, the market was in a downtrend initially, but then it got to this support and went up. That was where an uptrend started from. It got here again, and you can see that it continued up. So if the market is in an uptrend, if an uptrend gets to a resistance, it comes down. That means it becomes a downtrend and it starts selling. Now, if it is in a downtrend and it gets to a support, it goes up. So it will become a downtrend and it starts buying. That is it. That is that is the uptrend and the downtrend. Now, a funny thing is that a market can trend for months. Like an uptrend can be for months. Okay, I've seen this good example. This uptrend here, it started in January, and let's say, this is July. That is for a period of 6 months. This is Euro US dollar. You look at here, European Euro and US dollar. This pair has been on an uptrend for a very long time, for 7 months. You get, for 7 months. So I believe this downtrend it just started even when it gets to a resistance. Let me look at a higher time frame. Let's see a higher time frame. Exactly. So this was a resistance that the market expected and it started coming down. So an uptrend is not everlasting. An uptrend will definitely become a downtrend, and a downtrend will definitely change to become an uptrend. That is what how the market is. So it doesn't trend forever. So your own idea, your own is to position yourself in line with the market. When it's an uptrend, you buy. When it has gotten to a resistance, you exit and wait for a sell. Okay, that is what we think. Well, it can affect trade. Okay, I think you came late because we have talked about fundamental analysis before. When I when I was talking about fundamental analysis, I mentioned economic news and all of those stuff. I even gave examples like Donald Trump tariff affected the market, Ukraine and Russian war affected the market, the death of Queen Elizabeth affected the market. So I've talked about those stuff before. Now I'm dealing on technical analysis. Those are under fundamental analysis. This is technical analysis. Okay, so I believe we have now understood the concept of the uptrend and the downtrend. The next thing we are going to be seeing is the ranging market. We are going to be seeing the ranging market. The ranging market is quite simple because it gives you exactly the place to exit and enter the market. So the ranging market is where prices gives equal highs. First of all, prices move back and forth with support and resistance. And secondly, it gives equal highs and lows. Equal. It gives equal highs and equal lows. That is the ranging market. So for the case of a ranging market, you have something like this. Market goes up, it comes down, it goes up again, it comes down, it goes up again, it comes down, and this is a ranging market. So how do you trade a ranging market? Let me mark the support. This is a support, sorry man, it's length, and this is a resistance. So for a ranging market, what you do is to buy and sell. I will explain. In a ranging market, what you do is to buy and sell. So what do I mean? Oh, sorry. So if the market is at a support, you buy. You hold it till it gets to a resistance, you exit. Like you take your profit and you place a sell. You hold it till it gets to a support again and you take a buy. Like so in a ranging market, you are trading back and forth. Buy, sell, buy, sell, buy, sell, buy, sell. That's what a ranging market is. So let me show us examples from our chart. Okay, this is somewhat ranging, but it's not ranging in my eyes enough. Let me look for another example. Let me look for another example of a ranging market. Hmm, let me let's see this case. Okay, okay, okay. I've seen a good example that I can use. I think this one is better. So a ranging market moves between support and resistance. So, like this one that you have seen here, the market was up, then it suddenly came down, went up, came down, went up, came down, went up, came down, until it broke out of it. So, what you do in a ranging market is when it is at a support, like when it is down, you buy, when it is up, you sell, when it is down, you buy up, when it is up, is sell. It's like farming token in crypto. So this is why to trade the ranging market. Let me tell you the truth. The truth is that ranging market has the highest accuracy. Like it's I love ranging market because I know exactly where to enter a trade. I know exactly when to exit. I don't second guess myself. That is why I love ranging market. I don't second guess myself. I know when I'm exiting. I know when I'm entering. So that is why I love ranging market a lot. If the only problem with ranging market is that you may not see it on time. You may not notice it on time. That is the problem with ranging market. You don't get to notice it on time. But once you notice it, if you can make it, you make it very well until there is a break above or below the range. Either there is a break above the range or a break below the range. Okay, so that is for the ranging market. The last one we see this night is the shopping market. Shopee. Shopee goes something like this. There is no, sorry, this one is out of it. For a shopping market, there is no clear support or resistance. So the market is just doing its thing like this, like this, like this, like this. This is a shopping market. So in a shopping market, do not trade because you'll be frustrated. The market is not going anywhere. It's just dancing around the place. So shopping markets mostly happens when after a big move. So let me look for examples of shopping markets. Okay, I think I've seen one. Let me cycle this. This is a shopping market. This is a shopping market. The market is just dancing. It's not going anywhere. It's just dancing. This is a shopping market. And when it is a shopping market, please do not trade. You don't trade in a shopping market because you will not make profit, you will not make loss. The market is just what it is. So for a shopping market, don't trade, leave it. When the market has started making headway, you trade. So that is that. So is there any question for market trend? We have seen the uptrend, we have seen the downtrend, we have seen the ranging, we have seen the shopping market. Do you have any questions? Do you have any questions concerning the market trends that we have seen? Do you have any questions? Then you can ask about fundamental analysis. I gave some examples. Like I said before, Nigerian news or Nigeria affairs do not affect the forex market. So if our president comes to say something today, it will not affect forex, it will not affect the market. Okay. So it's major currencies like US dollar, Great Britain pounds, European euro, NZD card, NZD, New Zealand dollar, all those stuff. So it is when something happens in those areas that it affects the forex market or that particular currency. Okay, so I'm actually waiting for your question. This is the basis of technical analysis. Tomorrow, sorry, we're not having a class tomorrow. We're having a class on Thursday, the same time, 6 p.m. We'll go deeper into analysis, into technical analysis. This is just the introductory part of technical analysis. I'm writing our question. So, okay, is it clear? Let me answer now. Is it clear? Is it clear enough for everyone? Everything that we have learned today, do we get? Do we understand it? Since I'm not getting any question, wow. Okay, so in the absence of any question, I believe we'll call today a wrap. We continue tomorrow. Sorry, Thursday. We continue on Thursday to look at still on fundamental on technical analysis. So we'll go deeper. Like we just started from places, we'll be going deeper, 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 and deeper until we get to the climax. Okay. So this will be a good night for me. I am still Sarah Abamba. So this will be a good night. See you on Thursday, 6 p.m. Bye.